Morning, Steve here in Chicago with the morning grain comments. Well, it's kind of an understatement. Yesterday was a very volatile day. We started out concerned about trade. Everything was sharply lower. And then two tweets. One for the president said that there will eventually be a deal. Another one suggesting that Feds may not increase interest rates in 2019 as much as they thought earlier, rally the markets back to almost unchanged. Overnight, stock market's a little bit lower. We've got beans unchanged and corn and wheat a little bit higher. It's Friday, but we do get some export sales data today. We're not expecting any really big changes. Corn sales remain good, while bean and wheat sales remain below the pace meet to the USDA's numbers. It is interesting on the soybean side that for the first time in months, the Chinese buyers are asking for U.S. soybean prices off the Pacific Northwest. Doesn't necessarily mean they're going to be buying the beans, but one thing about all this trade issue that needs to be said is that the Chinese president said they will come in and buy U.S. ag goods, and he's usually a good for his word. It's just we don't know when. So in the soybean market, the first thing is how much do they buy, when do they buy, and the second thing is what's going to be the reaction of the funds. Right now we have them short about 59,000 contracts of soybeans. And what kind of value does the reaction of the funds covering those shorts put into the bean market? The second thing is how does the U.S. farmer react? Yesterday I was in central Illinois and most of the farmers came up to me and the first thing they ask is this Trump thing hurting prices and how long will it going to be last? The second thing they asked is will prices ever rally, ever again because of the global supply? And you have to kind of tell them that right now they're the best producers of grain in the world and they're actually overproducing versus the demand. And then the final thing is that the University of Illinois recently came out and said the average size farm in Illinois is 1,700 acres. And so you need 3,500 acres to break even. And so the question a lot of, especially older farmers, asking, should I stay in the game? Should I keep the 1,700 acres or should I expand? And so that's a big question, not only for the future of them, but just how big farmers get and how many acres eventually will get planted. There is some talk that a bean rally will shift some of the momentum of farmers switching 2019 acres from bean to corn, and they might actually plant beans. On the other side of the coin, South American weather is favorable, and we really don't need those acres, even though we could get a positive knee-jerk reaction if China starts buying U.S. soybeans. Also in the export sales, we're looking for 800 to a million tons of corn versus 1.2 last week. Maybe 600, 900 beans versus 600 last week, and 175 to 400 wheat versus 377 last week. Got a big winter storm moving across the midsection of the country. It looks like next week we'll also have another storm. And down in South America, some of the dry areas of northern Brazil is drying out. Some of the southern areas of Brazil and some of the dry areas in Argentina could get some rain next week. So the conditions down there are mostly favorable. One thing that people are kind of looking for is, what kind of July soybean call could I buy in case there's something going to happen? At $10.27, so that's pretty cheap insurance in case something surprisingly happens in the next few weeks as far as China buying U.S. beans, or within the next month, a deal that's being made. A 4.30 July corn call is 13 cents. A $6 July wheat is 10 cents. When we look at the collars of the market, what's the call above the market? What's the put below the market? Could I sell those if the market continues in a nearby range? I would not recommend that. These things are too volatile, but 57 cents for beans, 30 cents for corn, 34 cents in wheat for a July strangle is just too low for take that, put that up position on, expecting the market to decay in this trading range. I think one way or the other, the market's going to break out of this range sooner than later. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.